Good afternoon, traders. Today is Monday, February the 27th, around 5 Eastern Time. And I'm going to be going over commodities in this video. I'm going to tell you whether I believe the trend is bullish or bearish and give you levels to watch. Now, I have a lot on this list, so they're not going to be necessarily in sector order, but they're order on my watch list. So I'm going to go fast. Here we go. Starting off with cocoa futures. We have a 323 point trading range over this past month, which is decent. We're at a Fibonacci retracement point right at the 2434 level, so I suppose this will be minor resistance. Going over to the daily chart, if we could get up and hold over 2439, I think you'll get a little more upside, and we'll flirt with a 2009 pivot level of 2523. Now, if that fails, look for the 50% retracement at 2326 to be a support level. Next up, we have wheat futures, and wheat futures are currently in an uptrend. We have a little bit of resistance at 651.5, but take a look at this. This could be a not so perfect but long cup and handle pattern. Here's the handle, and we could be breaking out right here. Again, I said it's not so perfect, but I think you get the gist of it. Also, we broke out of a downtrend. Watch this for a little more upside. Had a big update today. Went from low of 633 to a high of 654, so it showed us that the bulls are trying to gain control, and you saw that it was on accumulating volume, which is another good thing. Next, we have coffee futures. We're currently in a small tight range over this past week of 4 points of the prior week. Now, coffee is clearly in a downtrend. It's trying to form a base here. What worries me is this could be just another leg down, as we've seen in the past. You have your leg down, you have your bearish consolidation, and then another move. Same thing could happen here. So if we get over the 207 level and hold, maybe you could get a little more upside, and then your resistance will be 215. If we crack that, we're going to look to start heading down to 187.70. And I'll tell you what, a lot of these coffee producers, the K-Cup producers, Starbucks and everything, are really excited about this going down. And that will help their margins out when they report earnings next quarter if coffee stays in a downtrend. All right, so next up is cotton futures. And we're currently in a downtrend. Have consecutive lower highs and lower lows. So unless we could get over 92.25, I assume that this trend will continue. And notice that we hit a high back in 2011 at 219.70. If we fail and break back below 88.5, let's look for a move at least down to 78. Next is sugar. Sugar's looking really good here. I'm bullish on the sugar trend. We met up with the 2344 support level, and we skyrocketed right off of it. I have an indicator showing me that the trend's up on the daily and the weekly chart. And take a look at this move that we just had. Look at the volume. On increasing volume, that's something all investors are watching because it shows there's institutional activity in it. Resistance is right here where we are, actually, at 25.81. That's right around where the 200-day moving average is and the 50-week. So keep an eye on this level. If we continue going up, we're going to look at the $27 level, which is the 2010 pivot. Up next is corn. And corn's been trading in a rather tight-knit range over the past 6 months. And I think that corn could have a breakout coming very soon. We have an uptrend on the weekly and the daily chart. Look at this. Could be a nice cup and handle pattern forming. Break out of that would be superb. And we could get up around the 200. It would probably touch the 665 level by the time we get there. And today's activity came on increasing volume. Corn's looking good. Looking at natural gas right now. And natural gas has been beat up. There is no correlation between natural gas and the price of crude oil. Now, I know a lot of people that started buying around this 224 level because it's a multi-year pivot. And that was the screaming buy right there. Now, you have to know that there is high margin requirements in natural gas, also, of course, silver, and various other types of commodities. But this one right here, the trend is currently starting to turn up. I don't like the action today. I think it's very undervalued. The demand just not there in the US. Now this came on increasing down volume. That was not a good sign. Our support is going to be right around 250. Our resistance is at 275. So I suppose we'll be trading in this range for a few more days. Maybe we could get a little more upside if we break above the 275. Now note this also. We have an uptrend from the low of 223. And if we break that, again, all bets are off. Looking at oats futures right now. This month we're in a 35-point trading range. And on the weekly time frame, we turned bearish, and on the daily time frame, we turned bearish. Now I want to highlight something. We are in an uptrend on the short-term time frame. So this 302.42 level is going to play some support, and you might be able to take a trade off of that. Now if we came down, here's a scenario. You could put in one more lower high and cause the big wave down to the 288. That's hypothetically speaking if we fulfilled this lower high on the weekly chart. Take a look. Consecutive lower highs and lower lows coming through. This was the last one. Now if we put in this lower high right here, this could be a bigger move. Keep oats on your radar. Alright, so looking at crude oil, I think that this candle right here were the people selling that got long right here right after we broke above the 98. I believe that crude was a pure technical breakout. When you have the dollar going down and Bernanke talking about more stimulus, crude's going to thrive in a strong economy. The market's going up, crude's going to go up. Now, I don't want to speak in direct terms saying that there are no divergences when the dollar goes down, because there are. I'll talk about that on a later video. But as far as crude goes, this move was on increasing volume. Could we get another down day tomorrow? It might be an inside day. That means that tomorrow's bar will be inside the prior day's trading range. Looking at the weekly, I think everyone is gunning for this 114.83. So if we did pull back to the 105 level, 104.5 on crude, a lot of people might be interested in buying it. Weekly charts up, daily trend is up. So you got to remain neutral to bullish on crude. Next is soybeans, and we had some resistance at the 1200 level on soybean, which was right around where the 50-week moving average is, and we blasted right through that. The trend on the weekly's up, the trend on the daily's up, and we had accumulating increasing volume on this run up that we had today. So a big move in soybeans today, and you have to remain bullish. If we hold above 1291, next level's 1327. If we fail below that, look for 1260 as support. Alright, so live cattle. Look on the right chart at the weekly time frame. It shows you what's been happening, a crescendo event ever since 2010. Hitting multi-level year highs. I think this is actually an all-time high on live cattle. We've noticed it at the grocery stores, and maybe it could be taking a break right here. The trend is temporarily down on the daily time frame, but it is still up on the weekly. Now, not saying that if we get a couple more down days, this could turn down, but as of right now, everything is bullish about live cattle on a longer time frame. If it comes and tests this up channel, then it could bounce off that and potentially move higher. Let me give you a couple levels. Mid-level is going to be around 129. Look for support at 126.62, and resistance, of course, will be 131.5. Looking at lean hog right now. And short term, on a daily time frame, we're descending. We're below the gap up. And we had large volume on the down day, means that that's a distribution day. So we're going to look at 87.85 to be some support. And if we get back below that, 86.17 is going to be a level. Overall, long term, on a weekly chart, we still have an ascending trend. If you compare it to this uptrend, then yeah, that is broken. But this could be forming a cup and handle pattern. Now, what I don't like on the weekly chart is that right when we came up around the 50-week average, we started to pull back down. You traders know I really watch this on the weekly time frame. It's one of the main averages that I trade off of on a long-term basis. So keep an eye on this uptrend level as well with your lean hog. Support's going to be 90.97. Alright, so long-term chart on feeder cattle is obviously bullish. Hit a high of 159.05. On this down day right here, it came on increasing volume, but also notice that we have an uptrend intact. This uptrend could get broken as of tomorrow, and if that happens, look for 157 to be relative support, followed by 159. Random length lumber futures. So we're currently in an uptrend on the daily and weekly chart, which is good. 27-point range on the month, holding above this 265.60 level. Another thing that I like. It had decreasing volume on this consolidation period. Another good thing. And it had increasing volume on this large up move. That could indicate that people are starting to get involved, institutions, and you might be able to see a higher move. Let's look for 276 followed by 286 resistance. 260 support followed by 257. Next up is orange juice, frozen concentrated. And we're in a downtrend on the weekly and weekly and daily time frames. We hit a high of 226.95 in January. But ever since then, we had a sudden decline. Now, this is interesting. This could be a tight-knit wedge that could lead to an up move because we are at the 200-day moving average and right around the 50-week. Or the downtrend could continue because, yes, we did get a lower high. If that happens, support will be 178, we'll call it. And then after that, 168.90 will be S2. Resistance levels. First one is 189, followed by 194. All right, so last two. First, we have gold, then I'll do silver. Gold futures, 83-point monthly range. Big move since the beginning of the year. Starting out at 1571, moving up to 1789 half high. So that's a rather large trading range. This could be a cup and handle forming if after this pullback. If we keep support of 1750, I think that a lot of people will be adding to their positions. This recent resistance will be your R1, followed by the round number 1800, and then just continue on the weekly time frame. It's 1804. So here we go. That's R1 1800, or R2 is 1800, R3 is 1804. Resistance 1750, followed by 1726. Trends are bullish on the daily and weekly charts. Now silver. All right, so again, we had a big move with silver, just like gold. And I'm going to tell you what I was looking for. I thought that this rounded top was going to lead to a lower move. But after we broke out of the downtrend, that's when the bulls really took control and squeezed the bears that were getting short during this area. We've had increasing volume lately, so as my day traders say, they really love this. I don't currently day trade silver futures. If I'm going to trade it, I'm going to do some kind of a risk option on the SLV, but we're above the 200-day moving average. Now 3550, I'm sorry, I thought that was the 50. The 50-day moving average is 3576. That's going to be our next major resistance level. If we could get over that, you might be able to see, 3940 test before long. If we fail there, let's call S1 3414, S2 3333. All right, that's going to be it, traders. Hope you enjoyed the video. Like it if you want more videos like this, or send me a comments and put any suggestions in the box below. Have a great trading day tomorrow.